Hello everyone, welcome to the ichimokucharts.com daily analysis for the SP500 for Monday, November the 28th, 2011. Well, a change of trend today, and we have a candle that's made a higher high and a higher low, marginally higher high, so technically a change of trend to the upside. A very solid change of momentum to the buyers for today's candle as well. If we look at the previous week and a half or so of trading, we had a series of candles that were making lower highs and lower lows, so the trend was moving to the downside with very strong momentum, and a long series of red-bodied candles. And today, a green-bodied candle. So a change of momentum towards the buyers for today's trading. This is a very large green-bodied candle, and that denotes the buyers making solid net bullish progress on the day between the open and the close. We've also had the buyers open the market down at the low and close up towards the high, and that suggests that the buyers have taken control of this market throughout the day. They've been in control for the whole day, and they've shown very strong commitment to this market throughout the trading day. We do have a smallish shadow on the top coinciding with this level, just getting near the 1200 round number, and that does raise some doubt for concern for this market approaching this 1200, whether we will have the upside momentum to break out above that level. The small shadow represents the buyers losing some commitment, but it was only a small amount of commitment that they lost there, so it could be significant. So it's a very important level for the next day's trading, the round number resistance at 1200. Now, for the previous day's trading, we had this small bodied candle at the end of this substantial downtrend, and that did set the market up for a change of trend to the upside. And we also had the market trading within the cloud, so by trading within the cloud we had a neutral market in big picture terms. In big picture terms now we have closed outside of the top of the cloud, and we are trading above the cloud, so we have a bullish market in big picture terms. When we consider that this market, this sell-off that we had for the previous week and a half or so, the market failed to sustain the move down below the cloud, so that could be quite important, that even though we had this great amount of bearishness, we weren't able to penetrate below the cloud and affect a negative market in big picture terms. So with this breakout up above the cloud, we have a bullish market now, a bullish bias to this market in the longer term time frame. We have had a bullish breakout up above there as well, so that is usually more significant than if we have a weak breakout. So the bulls have built some good momentum for this market to continue to the upside. We are still, however, trading down below the Kijun-sen and the Tenkan-sen, so the market is bearish in the medium term and fast term timeframes. But that Kijun-sen there, the pink line, has turned flat, so when that turns flat, price action tends to be attracted back towards this. So there is still a good possibility that the market will test above the 1200 region and perhaps test up to around these levels. So the next area of resistance up above 1200 is the Tenkan-sen at 1211. Then we have this area at 1219, that was a very solid area previously, and the Kijun-sen trading at 1225. If we do see the market sell off, well, then we will have to contend with the cloud, and the support from the cloud extends down to roughly 1157. We also have very solid support down below there. So in terms of how this market's trading, we are now perhaps seeing a recovery, but we haven't seen the market take out the short-term and fast-term indicators at the moment, but in big picture terms we are recovering. So let's wait and see how we react to this 1200 area. If we see a bullish breakout above there, we could see the market testing above 1211 to 1219, and then perhaps up to around the 1225 region. Next we'll take a look at gold, and here we see a change of trend again, a similar style of candle that we saw with the oil market, but a few differences here. We have this very long shadow on the top, and that's the similarity and a very small bodied candle, in this case a no body to this candle, so it's a doji type candle where the neither side has made any bullish nor bearish progress on the day between the open and the close, so that could be quite significant. The large shadow on the top represents downside price rejection and the buyers losing commitment, and that coincides roughly with the top of the cloud and this area around 1723. So that's a very strong resistance area for this market. In Ichimoku charts terms, we are trading within the cloud, so we have a neutral market in big picture terms. Bearish in the medium term and fast term timeframes by trading below the Kijun Sen and the Tenkan Sen, and we've been trading below both of those indicators for some time, below the Kijun Sen for the past 5 days or so. So that could be significant, but we've seen the market test at the bottom of the cloud, and we've seen the market, the sellers lose commitment down at that area, so that's a very important area of support. It now extends down to 1665, and it wouldn't surprise to see the market test down to lower levels. With today's candle, we've had a very strong failure by the buyers, and the sellers have closed with control of this market, so it wouldn't surprise to see a change of trend. So for the next day's trading, let's watch the high and the area up around the top of the cloud for a potential test back up above there. Very strong resistance, however, but certainly watch down below the low for a potential lower high and lower low, and a test down to the bottom of the cloud. If we do see a bearish breakout below the bottom of the cloud, then we do have support down around 1641, around this swing low at 1605, roughly coinciding with the 1600 round number, and then the next support is down to around 1559. So an important time for this market. Bit of congestive trading over the previous week, lack of volatility in the market, and we know that when we have low volatility situations, they lead to high volatility. So a breakout in either direction in this market wouldn't surprise. Next, moving to light sweet crude oil, and here we see a change of trend to the upside. Previous day's trading, we had a candle that was making a lower high and a lower low, but we did have a green bodied candle, so that did suggest that there was potential for that change of trend. Previous day's trading, we had the market closing up towards the high, so a fairly bullish candle, and today we've seen that candle with a higher high and a higher low. Having said that, however, we do have a very small body to this candle, and the amount of progress that we've made up above the previous close was only minimal. So we can say that the buyers are keen, but they're certainly not extremely keen. It's only a moderate amount of keenness. The small body suggests that the buyers have made net bullish progress, but it's only been a fairly small amount between the open and the close, so that does raise some concern about the potential for this trend to continue to the upside. But more importantly, we see this very large shadow on the top of this candle. And the large shadow represents downside price rejection from just above the 100 level. We know that that 100, that round number, is a very, very strong resistance level for this market. We can see that the market tested above there about a week and a half or so ago, and there was strong downside price rejection that lasted for a few days. And we're seeing even stronger downside price rejection today with this very large shadow, and it tells us that the buyers have lost commitment as the market traded up around that area. The buyers have been unable to maintain control of this market, where they did have good control of the market up around there, and then the sellers came in and were very much stronger than the buyers. We have closed down around the low roughly, so the sellers actually took control of this market, so there is very strong potential for a change of trend back to the downside today. Now, if we don't see that change of trend, if the market does test up to around this 100 level, that will offer itself as resistance once again. So it's a very important level for this market, and will extend in the zone to just above there. There should be a lot of stops probably placed around those levels. So we do need to be aware of that the resistance is not necessarily right at the 100 level. In Ichimoku charts terms, we are trading up above the cloud, so this market is maintaining its overall positive bias in big picture terms, and we're also still trading up above the Kijun Sen, so the market is bullish in the medium term time frame. We are, however, still trading down below the Tenkan Sen. We've been trading down below there for the last 5 or 6 days or so, and that means that we're bearish in the short term time frame, and two rallies to attempts to close up above there have failed, and that could be significant for this market. So we could see the market testing perhaps down to around this 96 region. Now we can see that the 96 region held as support on the 3 of the last 4 candles, and we can see the shadows, and we tested down below there down to 94.64, and the market failed to close down below there. So that's a very strong area of support. We also have support at this 94.64, which coincides with the Kijun Sen, and that Kijun Sen is pointing flat, so there is still a likelihood that we will see the market retrace back towards that area. Just looking at the Chica span here, and that is above the corresponding price action, so that's confirming this bullishness that we're seeing in the longer term time frame and the medium term time frame in this market. Now if this market does rally up above 100 and close above there, we do have a large zone of resistance from 103.39 extending up to around roughly about 104.80 or so, 104.75. So there is even strong resistance up above 100, which in itself is a very important resistance level. So for the next day's trading, obviously the 100 level is the most important level to watch, and do watch the low of the current candle for a potential test down to this 94.64. But if we do close a test down around there and fail to close around that level, we could once again see the market changing trend and testing up to around 100.